Great that we have so much audience. I knew the people will come to Vitalik because they were expecting us, so I don't understand why 2 people left the room here. No, jokes aside, it's great to be here and with you. Many of you are partners of us, and to discuss institutions meet Web3 here. We had a similar discussion yesterday at DevCon, and I think we are right in the right year with the Bitcoin ETF, and maybe even the right week to discuss institutional adoption. However, the Bitcoin ETF and the ETH ETF is a little bit of a mistreatment and abuse of what crypto is actually wants to be, and therefore I'm happy to discuss real crypto adoption. So let me start with a very brief opening statement and then hand it over to you to do a little bit of an introduction yourself. And the statement is the following. So what we can see at the very moment is a new wave of innovation, especially when you look at it from a banking, from a fintech perspective. So in the last years, we were talking a lot about open banking and stuff, but what's happening right at this moment, and in the last month, there has been even a new funding round, or like some funding for Gnosis Pay in that realm, which is extremely interesting. And this is that the new service will sit on-chain. So it is not the way Coinbase or OKX or others are doing it. Companies, fintech, centralized services getting on-chain, embedding a wallet and give the user access to Web3. No, the new services start right away in Web3. They have a safe smart account or any other account, as long as it's a smart account. What we learned from Vitalik, it's way superior to EOAs, obviously. But from there, the new exploration starts. Here in this new world, it's the Insti rails that get integrated. It is not the Web3 wallet gets integrated with an institution. So this is extremely interesting. So examples, what we can see here is Gnosis Pay, what we have on the panel. Another one is Zeal. There's Palladium in the US. There's Picnic in Brazil. So we don't lack of examples of this new movement to give a face to it. So I want to start with 3 bets I make. When we have the discussion and we look later on these bets, and we can have a discussion also off stage later with that. So the one bet is, equally as it was with fintech, it wasn't the big banks building the new wallets where most of the new million users are using. No, it was Nubank, it was Revolut, it was N26, it was Trade Republic, it was Robinhood. So the people who the new entrepreneurs who set mobile first. And my bet for crypto is that the race will be won by the Zeals, the Gnosis Pays, and the Picnics, not by the Coinbases of this world, because they put their basement in Web3 and not the other way around. That's the first bet. The second bet is the DeFi Legos, and those can be plentiful, for example, staking, but also kind of DeFi yield swapping and stuff like that. Those will be the reasons why we'll have this new ecosystem growing, because we will outpace those fintechs, those CeFi companies by such a big margin that I'm so confident that those players will win the race and not the centralized ones. And the third bet is credit cards like Visa, MasterCard, Amex, they will be the longest standing with regards to relevance. Let's see if we get you out at 1.2. But my bet is that we may get rid of the banks, we may get rid of this and that payment service, but will not get rid of Visa and MasterCard. We'll discuss about reasons later. So with that, great to have you on the panel. Artiona, do you want to introduce yourself?
Sure. Hello, everyone. Artiona Bogo from Figment. I lead sales engineering at Figment out of Berlin, so it's actually very nice to be here in my home city. Me and my team actually are working very closely with Figment partners, more of a channel type of partners. So you can think of exchanges, custodians, wallet providers, be those custodial or non-custodial, and we are looking to integrate the staking rails to Figment or to other providers as well, as our staking API is universal. So it's ultimately up to the client to choose at the very end. And yeah, I'm super happy to be here and looking forward to the conversation.
Great to have you here. Marcos.
Cool, hi. Well, good afternoon, everyone. Marcos Nunes. I'm new to the community, only a year or almost a year now. I've been in payments for more than a decade. I always like to say that I'm an old guy. And I've been helping MasterCard and Visa throughout my past life. in interoperating in multiple countries, implementing products in multiple countries, and that's how I got acquainted with payments. To the degree that I said we need to disrupt, and to the degree that we said, well, we need to do things in a way that it's more scalable and more options to 8 billion people out there. Yeah, so happy to be here. Thank you so much. And thank you, Maike.
Yeah, thank you. Hi, everyone. My name is Maike Hornung. I am our regional crypto lead for Europe at Visa. I don't think I need to explain who Visa is to this community, but I'm part of the crypto product team. And so what we do in our team, we try to develop new crypto products, and my role is to bring them to market and to partner, commercialize these in the European region.
So hi guys, my name is Joao Zecchin. I'm Brazilian from Rio de Janeiro. I've been in crypto since 2012 when I used to be a VC, and one of the entrepreneurs made me buy Bitcoin. So it's been quite a while. And I'm currently the founder of BRX Finance. We develop an orchestration layer through smart contracts that operates infrastructure layer in TradFi. So we do a lot of private credit for corporations. We do a lot of payments, and now we are integrating with other forms of our TradFi infrastructure, and are looking to roll out into more safe integrations and Gnosis Pay integrations. So happy to have this talk with you guys.
Perfect. So we have an orchestration layer for TradFi. We have Visa. We have a new payment service, banking service in crypto, and a staking provider. That's an interesting mix. Let's start with you, Marcos, first. What is this piece of plastic here, and why is this special?
Yeah, so we started last year trying to connect TradFi with Web3. In our understanding, when I met Stefan, which is my co-founder, and he's also founder of Gnosis, we knew that all ingredients to actually do banking in Web3 were already developed by the Web3 community, and they just needed to be stitched in a way that we can actually talk to the traditional world. In Web3, we created new names for things that actually existed already in traditional world. So we tried to actually connect those two ends. And at the end of the day, the first self-custodial card was created. From day one, we didn't want to only issue a card. We knew that that was the most interoperable way to bring cryptos to the point of sale. Visa had to be a very big contributor to this, so I'm a little bit more optimistic on the role of traditional institutions, but at the same time, I'm also very realistic about how they need to, well, evolve if they want to continue to exist. So with this piece of plastic, which it just looks like a traditional card, we now, my dad, which I always joke is the Homer Simpsons of technology, he is able to make transactions with the password 1234. But instead of removing balances from a custodial party, which is a bank, he can now take it from an account that he owns, even though he doesn't understand much what that means. But in reality, what we just enabled when we do this, we separated bankers from banking. Banking should be the right from any individual in the world that exists. Bankers is an offer provider, which can be, well, traditional, like the legacy that we have right now, or with new stable coin providers or whatever comes to the future. So, yeah, so that's a bit of the view.
So if I get it right, you're sitting on chain and integrate a lot of services. So how many services did you have to integrate?
So to launch the first product, we had at least 9 partners, commercial partners, plus an entire community behind. So we don't have a commercial agreement with Safe. We have a technical relationship with Safe. So that's not even on the first 9. It's quite complex because in one hand, there's lots of rules and standards on the traditional world. And if you want to innovate, of course, you need to create the right bridges. So you have the bridges with the POS, imagine that you're signing a blockchain transaction.
By the way, when he's talking about POS, it's not proof of stake, it's point of sale.
Yeah. So point of sale for the old people like me. So basically, when you're transacting the point of sale, there is a protocol that you need to talk to. It's ISO 8583, and then that protocol is going to talk to your card, which is ISO 13443, and then that message is basically going to all the way to the processor on the issuer, which is the bank, and then there is going to say, hey, this is a blockchain account. Please send to the blockchain processing entity, which is Gnosis Pay. Then from Gnosis Pay, we know your blockchain address from Save, and then from there we do the entire things behind the scenes.
So for everyone who thought like Vitalik and what he's talking about is a complex stuff, you don't want to work in TradFi. But like what I was intending to showcase is what seems like a very easy product, also with the fintechs that you're using, is quite a complex ecosystem. However, it's not that modular, how the things are that we are building. So therefore, amazing that you take this effort, amazing that this can be enabled by Visa. So over to you, Maike. I believe, I'm not sure, but like roughly, I guess not even a tenth out of your kind of, 242 billion transactions per year is done by self-custody payment. You have 40% market share on all credit card or debit card payments and a market valuation of 500 billion. So why the fuck you care about this tiny fraction? Why, why?
I mean, fair enough, crypto in the entire ecosystem of payments is still small. It's still early days for crypto if you compare it to payments more widely, right? But nevertheless, and I shared it yesterday at DevCon as well, and I think we are less interested in the crypto price, but really what we see crypto as is a new set of technologies. And basically two types of innovations. There is the network layer, so there is a ledger that everyone can write on, everyone can see it, but nobody really owns it and no one controls it. And then there is the token, the software, the code, whatever that asset may be that runs on top of it, that proves the ownership and that can be transferred from one party to another. And why do we matter about these two things is really, today, the digital economy is powered by thousands of individual ledgers. And with the new technology, with the network and the tokens on top, you basically create a single shared ledger that is always on, that works and functions 365 days, 24 hours. There are no weekends, there are no holidays, there are no cut-off windows. And so for us, it's basically a new type of infrastructure where all sorts of money and value can be moved over. And so in that regard, we are a technology company. We have an obligation to look into this and to explore it and test it, and yeah.
So institutions are getting it. Great. Artiona, is there like staking, right? That's your home, bread and butter business. Is in this new world where the account sits on chain and it is about payment here, banking there, maybe investment there, where does staking fit in?
Yeah, you wanted to talk about real adoption of crypto, right? So not sure if 15 billion of assets under stake count as real adoption, as obviously staking is one of the core constructs of blockchains. However, yet very little people actually know about staking, or they may not even be aware that they can actually earn staking rewards on top of their ETH sitting on either custodial or non-custodial wallet. It actually depends on the level of integration that is offered in those respective wallets. So staking is definitely one of the Lego pieces, as you put it, at the your super nice summary at the very beginning. You said it all, actually. It's one of those components that it's a must to actually end up in a full, complete crypto banking solution. Of course, there are other ways for users to earn yield. Actually, we don't like to use the term yield in a staking context, as it often infers lending and borrowing activities, which often, of course, carry higher risk for users.
What do you prefer then?
We call it staking rewards. So native staking rewards that are issued directly from the protocol. So staking is almost risk-free premium, of course, when done with the right provider. There are also inherent risks to staking, such as slashing risk or wrong key management from the underlying provider. However, when done with the right principles in mind, like we talk a lot about our risk-adjusted philosophy that is comprised of client diversity, of our safety over liveness approach, so we would rather stay down rather than automate for full unautomated failover, right? So that we earn also those epoch-based attestations. We really don't care about those if we are risking to get slashed. It's just maybe a fraction of cents at the end of the day. It's about an MEV relay strategy. So it's like we don't want to get into the rabbit hole of how you can actually think about the risk-adjusted strategy. But at the end of the day, whenever you see a number, an SRR, as we call it, staking rewards rate, from a provider, you should think what's behind that number. What is the staking provider actually doing to ensure, to give you or to promise you that SRR, right? As obviously nowadays everyone is trying to optimize, and oftentimes those optimizations also mean over-engineering, and does that over-engineering for 1 or 2 extra basis points actually is worth the risk of getting slashed, and is that worth higher rewards over a few weeks or months and then getting slashed, I don't know, after 6 months or a year or so.
So what you want to say is staking is not commodity?
Staking is not commodity. Despite having a lot of staking providers out there, I would argue that, I mean, the numbers tell the story better than myself. I'd argue that it's only a few staking providers that actually know the stuff and can ensure really risk-adjusted rewards over years, not months. And we have actually seen super large names that got slashed last year. And oftentimes it's not a matter of like willingness. It's not done on purpose. No one wants to get slashed, right? It's a matter of like having the right processes in place, having the right mindset, the right tooling, the right monitoring. It requires professionalism on the back end. And then not everyone can do that because, different priorities and all that.
So what I'd like to see is a premium provider that takes care of that someday being implemented in Gnosis Pay. So you have some homework to do, Marcos, and you both should sit together. Joao, over to you. You're not the only Brazilian sitting on this stage, but still I think we in the audience have quite of a European Western bias here. Shed some light into the ecosystem in Brazil, especially with regards to kind of services like Gnosis Pay. Do you see similar stuff over there?
So the ecosystem in Brazil is quite interesting because we are in the final stages of the CBDC. So this has been announced by the central bank, I believe, last year, and they have kind of a roadmap until the end of next year to finish the implementation in a private chain. So this aroused all of the banks and the financial institutions to create kind of a digital assets department and engage with the private sector to understand what's happening in this with this development of this technology and outsource a lot of the technology, right? So I think we are kind of when we talk to the banks and to other players around the world, what we understand is that Brazil is probably the market with the most relevant demographic, with the most friendly.
Why demographics? Is it big? Is it young? Is
it's
it growing?
200 million people. Currently, 100% banked, right? Just Nubank has half the population banked. So we're going to have an environment where it's going to be a proving ground for a lot of these technologies. Mm-hmm. And there's an additional factor which is super interesting, is that the traditional use case for example, instant money transferring that people use for crypto in some places is not effective in Brazil because we have PIX, mm-hmm. right? And PIX is 100% instantaneous and 100% free, offered by the central bank. And it actually took over, currently 70% of the financial transactions in Brazil, payment transactions in Brazil, are done by PIX. So it took over a lot of the market share from the credit cards to PIX. So when we look at the
in relatively 2 years, like it was 2 to 3 years.
2 to 3 years, very short time. Yeah. So this is actually very positive because you see the shift in culture that the central bank can cause, right, in a very short time. So we saw this with payments, with PIX, and we're hopeful that we'll see this with the CBDC and blockchain as well. So we'll have a really hard push for people to be onboarded onto on-chain with institutional solutions. And when we talk here, you started the talk with these financial players will end, and I see the credit card being the last one to end. I think we need to look at like banking solutions. They're made up of payments, but they're also made up of credit.
Yeah.
And we see a lot of potential for this credit to come on chain in a new way, in a creative manner, right? And this is what we focus on BRX, is interacting payments, credit, all of that with
credit against the person, or like we know it from DeFi, where you have collateral put up and then you can lend against?
All of them. So
okay.
Like clean credit is what you're talking about, like a bank would do. That's supposed to come on chain as well. And collateralized credit like Aave or Compound, things like that. Those models are going to be transposed to TradFi. So what's most interesting is to understand how these institutions are going to behave when they understand the potentials that you have on chain, because they still don't understand, right? And that's where we see a lot of potential in Brazil to expand solutions. And we think Gnosis Pay is kind of an interesting solution because it marries these worlds like perfectly, right?
And so are there plans?
You said.
No, we have plans, of course. Like, but I think our view is that, for example, you should collateralize these types of products that are collateralized with yielding assets, like treasuries. Why not? And for example, since transactions are done instantaneously on chain and off chain, you should use the on-chain data to maybe provide credit as well when needed. So there are long-term views between what Gnosis is doing and what we have seen previously in Brazil.
Very cool. Cool. So some of you know I have a kind of a regulatory background, and so like I have been lobbying quite a while. And even in fintech, where everything was centralized and you have to say C controls and KYC, and a former colleague of mine is sitting here, ex-bank board member, there's a lot of hesitation to touch into new stuff. So, Maike, how do you do it? Like you have some kind of reputation to lose.
Well, I think we share a little bit of our history, right? Like my background is also in government relations, and I think the work with regulators is really important on that end. As we can see also with the Gnosis Pay card, where a lot of thought and partnership has gone in when it comes to compliance, AML, and so I think when we talk about open banking, PSD2, open finance, all these topics that we're on the forefront for the past years in financial services and payments regulation. That is a benefit that blockchain technology already provides, right? Like normally mobile wallets that are built on separate platforms that cannot talk to each other. On a blockchain rails, right? The blockchain basically is that middle layer that can allow for the compatibility of the data and the communication between them. So I think there is a lot of thinking happening on the regulatory side in the traditional world, and now we're seeing that thinking is starting also to be addressed in the crypto world with Mika coming in, and so I think we're actually in a good place in Europe where a lot of thinking has happened and started to happen. So we have a market here where a lot of crypto businesses are flourishing and building their businesses in.
That's interesting. A small anecdote from my past at this very bank where my colleague is sitting here, who, by the way, left it too. We wanted to come up with a product that's called Bitcoin collateralized or crypto collateralized lending, but like where you do the lending out of a balance sheet of a bank, so basically the core business of a bank. And it, on the one hand, you would want to have a low LTV, loan to value, because markets are moving quickly, so you better have a lot of risk buffer. On the other hand, it wasn't allowed for customer protection because it would be kind of a loan where you take in too much collateral. It would be deemed as not fair to the customer, because it's treated like a real estate, a house. But like Bitcoin is a little bit more volatile than this building here. And so ultimately we ended up not being able to build this product because there were two regulations diametrically squeezing us, and actually not like squeezing up, we would cut in half, basically, if you would go live with that product. That brings me to you, Markus. So I remember in July 23, we were on stage at ETHCC together with Stefan, your co-founder and also co-founder of Gnosis. And you launched the product, and then we had to wait until this year to finally get the card. Why? Why did we have to wait so long?
So there's many aspects to this. First, technology, we managed to crack it super fast in certain aspects that we thought it was ridiculously complex. Like I said, crypto community as a whole developed most of the problems or solved most of the problems for crypto, and they just didn't put those pieces together. So we kind of put them together, it was working, and then we had to basically get clearance from our partners. And that, of course, took a little bit longer. But that I'm actually fine. It was a very good and educative process, because you're talking about... Yeah, no, seriously. And I don't say this because you're here on stage, because I had bigger problems. And I say that because, in one hand, you have two types of institutions out there right now. Those that deny and are just losing the time, and those that are making it slightly more difficult so they have the time to catch up. And for me, Visa is sometimes making it a little bit more difficult to catch up so they can basically be relevant, hopefully, in the future. But that to me was one of the aspects, having institutions, understanding. Regulators was actually probably the easiest together with the technology. And the game that I had to play was translation. So it was like one was speaking English, the other one maybe Portuguese, right? In terms of the way crypto was describing traditional. So we kind of had to, get together somewhere in English to explain both. The most difficult was the commercial partners. They start getting super greedy throughout the process. And then all of them tried to own us. and this made it very difficult. So every time we had a contract, then that contract had to be revised again and again and again, to the degree that they wanted to charge extremely high fees, because they said if it's crypto, people are willing to pay high fees. And that was super difficult. We managed to block most of it. We're still cleaning some of that to make it more scalable. But on the nice side of this story, which I love, I really would like to actually use the example of Brazil. Once the regulator understands the potential, and I will use PIX as an example, which is widely out there for the crypto community to be inspired. Once they understood that 24/7 settlement, clearing, interbanking was necessary, in between 2 to 3 years, an entire country of 210 million people got banked. And if you go back 5 years, not that long ago, most of the fintech topics were about how can we, bank the unbanked. And it was all about that, and KYC, and suddenly, issuing keys solved the problem. And we have already all of that in crypto, and it's interoperable, and it's borderless. So I feel like our job was to glue both. We created a card that is actually bank compatible. So if any bank right now wants to issue Gnosis Pay card, it will be connected to the traditional ledger of a bank, because this card has a PUN, a personal account number. And that PUN can hold balances in the ledger of the bank or in the ledger in the blockchain, or both. And the bank, if he's not mature right now to turn on the blockchain ledger, he can basically keep it off. So I have a very nice, appealing conversation with many banks right now, which is you can still continue to use your issuer, which will give you a traditional debit card. But if you come to me, I'll give you a HDMI ready for people that are old like me. TVs back in 2006, 7, they were all HDMI ready before they became HDMI, or 4K ready or 8K ready. So the content is not there, but if it is, you can actually see it. So, yeah.
You're really pondering hard on your fact that you're a little bit older than us.
I am. I could lie, but no.
But with this age comes a lot of TradFi experience that is needed to kind of do this translation work, which is extremely relevant. So when I'm on conferences as the Insti guy from SAFE, and I'm not talking to a core kind of Web3 audience, but rather the kind of TradFi guys, I try to provoke them and say, everything that's in custody is not real crypto. And the least thing that is crypto is the Bitcoin ETF. I was starting with that. So, Artiona, like you are serving a wide customer base, and most of the assets that are ultimately staked by Figment are sitting, I believe, in custody still. What's your kind of perspective? If we now leave the room of payment a little bit, what's your perspective on the next 5 or 10 years? Would you expect the share of stake that you get coming from self-custody will be bigger? Will it stay the same? Will it be less?
I mean, we're seeing a lot of activity around self-custody accounts or smart accounts, if you will, also those based on SAFE, right? And so with all of the activity and them being at the epicenter of this financial activity, there's also a lot of infrastructure being built around them that creates a fertile ground for staking as well. We often say at Figment that custody and staking go like peanut butter and jelly. So if you're actually leaving your tokens on your wallet and not staking, you're losing money. Figment is non-custodial, right? So anything we do is non-custodial. We work with qualified custodians, like we work with clients that have launched their own non-custodial wallets and allowing users to manage their own keys. However, I can see the trend. I cannot make any bold statements right now for you as we work with all of these different partners, right? However, I would say that hats off to these QCs and, custody tech providers
QCs.
That have onboarded.
Explain QC.
Qualified custodian, yeah. So they hold the keys and they manage the keys on behalf of the clients. So heads off to them because they have actually onboarded the next wave of users. Like let's applaud them for this, right? We need to get there, and if we want to use banks as the entity that does this onboarding of the next 1 billion users, let's do that. And then eventually there will be a phase where people will perhaps move away from that and be their own bank, if you will, either via smart accounts or so. But yeah, from our perspective, we work with anyone. However, we can notice some of the trends developing recently.
I like this note. When we talk about self-custody and be just angry about custodians, that's the wrong take. The reason why so many funds are in custodians is actually that we have not found a solution until like the last years to make it easier. Today, however, we are there, and that makes me quite confident there, and great to see that you also observing that.
And perhaps
trend.
Also segue why staking is not commodity, because as long as you talk to these entities, you need to check all of their boxes, and not everyone can check all of those boxes, right?
You made this point. Joao, last question before we open that to the audience. Where are you seeing coming, where does the most demand come from? You say the Brazilians are very quick in adopting PIX, your your instant payment rails. You're expecting the same to happen for CBDCs. You hopefully expect the same to happen with crypto. But in that regard, let's divide it again. Self-custody or custody, what is your bigger market? What are you focusing on? If you have to bet like kind of $1 million in marketing spend, will you bet it on the custodians using your product and integrating it, or the wallets?
100% the wallets. But it's a fight, right? Because banks, by definition, they're custodians. So when you deal with these types of institutions, they feel resistant to kind of give up custody. But something, again, in Brazil, interesting things happen. Because what happens in Brazil, we have kind of the central banker that we have in Brazil for the last 3 years. He's definitely a crypto guy. Like, there's no doubt. Like, Pix, the inspiration of the technology of having keys and like a private key and a public key definitely was blockchain. So that inspired Pix. They just didn't decide to build it on chain. They built it in an internal system in the central bank. But what he did now is he detached the front end from the banks from the actual core banking. So you have an app from the central bank that you can access all your accounts. And you don't need to go through the front end of your bank anymore. So like he's promoting this type of competitiveness and this competition between players and new players and removing the borders of like the barriers of entry, so that the system can actually be better and evolve. And we see a view that this is on top of blockchain technology, right? So regarding the custodial question, like we are 100%, everything we do is non-custodial. We deal with a lot of financial institutions, but we also have our own kind of financial kind of infrastructure so that we can be independent from these players and can have our own direction where we want to go, right? Of course, we're non-custodial, but a lot of things that we do are still very centralized. We still are not at the point where we can decentralize every type of operation that we do. But it's in our view, and it's for sure something that's in our ethos that we want to get there at some point.
Yeah. I think it's also drawing this picture. I think that Friederike from Gnosis is also drawing, which is you have this, I think, this voice over IP that kind of at some point has been in parallel or even was piggybacking on landline telephone communication, and then it was kind of quit even, and then now everything is actually landline is going via a voice over IP, and we're seeing the same thing, right? Like self-custody is growing, crypto growing, and it goes hand in hand, and some parts I'm quite sure remain. The one fact about Visa, for instance, that we'll not solve from the crypto angle, never. It can be solved maybe via social media, but this is the acceptance rate. So tell me the blockchain that makes my kind of kebab store in Kreuzberg accept my payments. So that will not be solved by crypto in itself. The acceptance is a huge bunch of contracts and obviously also technology, but like also those contracts that make it possible to run around with this piece of plastic because it's accepted, right? And that's what you talk about this kind of acceptance rate. So we have some minutes left. I have also some questions, but before I get into the last questions, I want to also open it for the audience. So do we have a mic and maybe someone with a question? Then now is your time. Yeah, we have one here in front, just no mic, and a second one there. Okay, yeah, very smart.
Hey,
the integrators. Thank you, Marcus.
Marcos and Maike, pass for you guys. So for Gnosis Pay, you have a really complex value chain, right? You have Fractal, Elliptic, you have Monerium in there, and I guess a couple other things under the hood as well, right? In your experience in the near term, is crypto going to have to assimilate TradFi more in order to spur new adoption, or will TradFi move closer to us in the near term?
Can you hand it over?
1 or 2, 3, 4 years.
Sorry, thank you.
Thanks.
Do you want to go there? I go first? Okay. So on top of those that you mentioned, we have a personalization bureau, G&D. We have Paymentology, Monovate, Taya, and many others. So what did we have in mind? If I try to change people's behavior, it will be very difficult to create adoption. So I needed to do something exactly like any human being on earth that's seen a card these days knows that you have to put your card 1, 2, 3, 4. Maybe in the US, slightly different with swipe, but closer to 1, 2, 3, 4. Okay, so we needed to go from that and then reverse engineering everything, right? I think we created the first pump. Hopefully now the community can see from that pump what other ways can we actually, do similar behavior. I don't think TradeFi will be able to learn Web3. And I believe Web3 will be the future server or the future provider to regulars. But lots of myths needs to be eliminated in this process. And I think that's probably the majority of work right now. There's yesterday I was talking to a Web3 guy that was, like old Web3, meaning a very successful guy in Web3, and he said it's impossible for you to launch Visa cards in Israel. And he had all these myths in his head about KYC, about validating people and addresses, and I think if we are able to eliminate all the mislanguage, it will be faster. So hopefully with this initial kick, you can inspire the rest of the community.
I think it's both sides that need to move towards each other, because ultimately it's, I think in the TradFi world, if things are done differently, there is a new set of technologies where you can achieve the same objective in the TradFi world on KYC, AML, all the things that the traditional institutions are bound by. They can be done in the crypto world as well, but a different set of technology is used for that, and that needs to be understood and then it needs to be explained. So I think there's a lot of educational work to be happen to give people in the TradFi world the comfort and the idea that all of it is secure and trusted and et cetera, and then vice versa. I think that old paradigm of we can do it all without TradFi that the Web3 world has been pushing for the past years is maybe also not the best way forward. But there are certain rules and there are certain safeguards and standards and things that are important to protect the customer, to protect the integrity of systems, to protect against fraud. That is important, that needs to be maintained, and Gnosis Pay did a fabulous job in achieving that and bringing together all the partners that are needed in order to use the new infrastructure and the new technology, but at the same time have all the safeguards and things in place that are needed to bring such a product to market.
Okay, do we have 1 minute more? Okay, then we have you don't want any more? It was answered already? Okay, is there another question? Okay, so then let me just finish with one thought, and this is the new thing that we just described, right? This Web3 in the center, Insti gets integrated, not the other way around. The problem is we don't have a name for that, and there's a cool thing we could observe in the last years where everyone is talking about this kind of IoT integrated with crypto and like yada yada yada, and like everything's different and like it's not a nice name. Ultimately, this area in crypto came up with a new term, which is now DePIN. And now everyone in crypto at least gets it. Okay, yeah, what I'm doing here is DePIN, like the VC is getting it, the media is getting it, like the entrepreneurs, the devs, everyone is getting what DePIN is. At least some kind of an understanding we have, and then everyone beneath that is different, and then they can explain what exactly they are doing. And I think, Markus, we need somewhat the same for what we are building here, what we are observing, where like an integrator like you can integrate kind of Visa payment rates, Lego bricks for staking that bring, how did you say that, this premium, not yield, but premium reward?
Risk-free premium.
Risk-free premium, or BRX also integrating that with TradFi. But this new idea needs a name. We don't have it.
DBank.
DBank, maybe, yeah. Let's come up with ideas. If you have good ideas, just like tell us. And
my biased view is that it's still banking. It's just that banking do not need now bankers, and then I think that's more the direction, because you're going to have different ways of doing finance. Like I can basically stake, get a loan, spend that loan, and and this is all banking, still. But again, of course. Yeah.
Anyways, we want to coin that term. We don't have it yet. Maybe it's debank. Maybe it's something like decentralized banking. So if you have ideas, tell us. Thanks for my speakers here, and let's chat later.
Thank you.